Hello and welcome to this very special show, which we are calling very simply Be Bullish. That's what the markets are, extremely bullish about both the medium and long-term prospects of the economy and, of course, the markets themselves. We'll try and give you the whole perspective from market veterans. You'll hear it from Ramesh Damani, who's seen various cycles in the market. He's been bullish for a while. He continues to remain bullish. You'll hear it from Sanjeev Prasad, the most respected analyst out there on the street. He heads Kotak Institutional Equities. You'll also hear it from Mahesh Patil, who is Co-Chief Investment Officer at Birla Sun Life Mutual Fund. He'll get us the institutional perspective. What are funds doing? Markets remain extremely euphoric. Make no mistake, headline indices may dither a little bit after the huge run-up that they've had, but just look a little deeper. Just look at simple things like market breadth, which has turned very much for the positive. Stocks from the power, capital goods, infrastructure, banking names, and of course, generally speaking, across the board, PSU names are ripping higher. It's almost as if there is a buyer's panic and sellers are striking. They don't want to sell. So, underlying this market, there is a big shift which is happening, which hopefully will sustain. Let's hear it from Ramesh Damani, member Bombay Stock Exchange, first up, who believes that we are in the second phase of this current bull market, which is still going to run. He thinks it's a mistake if you think the Sensex is up 3,000 points, that you should sell. A typical bull market will essentially double the index value. Ramesh Damani, listen in.
I think you run out of adjectives to describe it. Lightning strikes, Dalal Street becomes Saffron Street. But to be honest, I'll tell you, a lot of smart money market people had predicted, believe it or not, a majority for the NDA. So for the BJP, not even NDA, for the BJP. So in that sense, the market is jubilant. I've been to post-election parties and I've seen hardened battle traders who've seen almost everything, greet each other joyously. So it's been a very warm feeling on Dalal Street, Prashant.
Mr. Damani, would you agree there is a general sense of well-being amongst market participants? I mean, a sense of comfort that you have some visibility, even if the market declines a little bit, it'll be bought into. Would you agree with that assessment?
Absolutely. I think, like I suggested to you earlier, that it seemed to us, at least looking at the screen, that 3 months, 4 months ago, we were in the early stages of bull market. It now seems to have crossed over. We'll enter a second, more mature phase of the bull market. So, the pickings will be good on Dalal Street. I think we will see a good amount of foreign investor interest, a good amount of domestic interest, and that will lead to, fairly higher levels from this point.
How would you sort of rate the weight of expectations on the new government and particularly on Mr. Modi? Do you think expectations are too many and they'll be tough to fulfill?
They are high. You're right about that. They're extraordinarily high for one man. But I think he has a reputation, a well-deserved reputation as a man of action. I think he doesn't belong to the India of the 1950s, command and control, welfare, patronage, crony capitalism. He doesn't belong to that genre. I think he has a sense of mission, a sense of getting India back to GDP growth. So we will probably see an extended honeymoon for him. And given his track record, there's reason to believe that he will meld the best of politics, technocrats, politics, and get India on growth path again. I think for the last few years, the problem is that we've been stagnating at 5.5% growth, which for India is almost like a recession. So now if he can get us back to 7.5% of growth, take firm steps to clear investments, I think there'll be good cheer all around. He will get a good honeymoon, so it will not be a short honeymoon for him.
Mr. Damani, would you say that this is essentially a government which at least for a few months would enjoy what I would call, they can't do anything wrong kind of a feeling? I mean, they can't do anything wrong. At least they'll have that honeymoon period stretching into a few months. Would you agree?
I think he could read out from the telephone directory and get applause. I mean, I think you're right. He will get a very long rope. And I think he deserves it. I think, he's got to dismantle a lot of the crony capitalism, welfare, patronage-based systems and come up with fresh ideas. So the first marker, Prashant, if you will, is the market will be looking for as to who becomes the new finance minister. Now, he's a man of action, so he wants to get in a man of ideas. The market hopes that would be the winning combination.
Do you think ministerial composition will be critical to watch?
It always is for the, the markets. I think particularly the finance minister is the most keenly watched announcement of the new government. It gives an indication in which way it's leaning. Is it political patronage or is it with a man of ideas, someone with a fresh sense of zeal? So, yeah, I think it would be important.
There are lots of names doing the rounds. I'm sure you've heard of those same names as well. I just want to get a sense from you. Who does the market want to see in the important economy-related posts? Take the finance ministry, and the person who will head that important ministry. What's your sense? Would you like to see a career politician or a technocrat? What's your sense?
Well, the 2-3 names that are being bandied around. See, as I told you, Mr. Modi has a well-deserved reputation as a man of action. He wants to get a man of ideas in, someone who opens up the intellectual firmament, tells them what is possible, what needs to be done to bring India back to stream, to that 7-8% growth when we were the envy of the entire world. So, I think 3 names that are going around would all be acceptable to the market. The first, of course, is Deepak Parekh, a technocrat. He would be the Nandan Nilekani of the NDA government. Market would be wildly excited behind him. In case they cannot go for someone like him, he could go to Arun Shourie. I think that would be welcome. He's a man of ideas. He's worked with the Bajpayee government. He's, a man with a need to leave a strong legacy. Both these names would be very much approved by the market. Sushil Modi is a dark horse. He's done a lot of work with the GST. The BJP is committed to implementing GST. So he may be the dark horse choice in this matter.
Many who I have spoken to and who have studied the so-called Gujarat model say that it's going to be the chief. It was the chief minister's office which drove things, which drove policies. Bureaucrats implemented. Mr. Modi trusts bureaucrats. He's going to try and implement the same at the center. Do you agree with that assessment? Individual ministerial positions will be important but not critical. It will be, once again, the Prime Minister's office which will be supreme.
I really don't know, but India is 25 times larger than Gujarat, so it requires a different set of challenges. It's too big a country for one man to run. He has to delegate, give priorities, and make sure that happens. So I'm not exactly sure which style he'll adopt, but my sense is that he will hold people accountable. He will give them power, but he will hold them accountable. I think that's been his style, and that's clearly we want. I think the market, Prashant, will ultimately hold him to the standards he set for himself. That is, more governance, less government.
Mr. Damani, is there a bit of a conflict here when we say that, and you began by saying he's not somebody known for crony capitalism, etc., but this was a campaign which was backed by India Inc. and corporates to the hilt, very openly, vocally, by many. So, is there an irony here? Is there a contrast here? Or do you think, well, the narrative fits perfectly well, that you help corporates set up industry, create jobs? That's essentially what people want.
I hope this is the new India. We are changing that, making wealth is no longer considered a sin or an affront to society. I think the role model of socialism, ascetic Indian, must change to be the global Indian and aspirational Indian. I think Modi tapped into that, and I think all Indians want 8% GDP growth back. I mean, we need to create jobs, we need to create, infrastructure, we need to create education. That can only happen with 8% growth rate. Otherwise, the pie becomes so limiting that you have to then fight over whether you want to allocate it to gas subsidies or you want to allocate it to a Narendra scheme. So if the pie grows, the entire nation prospers. So I think I don't see a disconnect between the people of India and corporate India, both rooting for 8% growth. And I think for the moment at least, we believe that Mr. Modi is the man who will do it.
The other question is the growth itself, right? So will he be able to take us from where we are to between 6 and 7% rate of growth? Many economists have already upped their fiscal 16 estimates, GDP growth estimates to 6.5%. And will we stay there? Or can, with this new mandate, the new government, in turn, effect a change in the trend rate of growth itself? We move higher and for good. What's your sense?
I hope it's the latter. I really hope it's the latter. See, there's a lot of low-hanging fruit that Mr. Modi can take advantage of. When I was talking informally with some members of the BJP think tank, for example, they said labor right now is a federal policy, but the BJP could make it a state policy. So then some states could start experimenting with hire and fire, exit policies, minimum wages, do all sorts of things, which a federal government can't do at the center. So, there is some low-hanging fruit which you can push through. The BJP has had some economic missteps, particularly with FDI in retail. I think that was a misstep they need to change. But I think if we become a more open, a more competitive society, where we encourage FDI, encourage Indians to compete, encourage better labor laws, I think we'll all be better off on that. And I think that is really the challenge that Mr. Modi will be held to. I think if we grow at 5 to 6% or just go up 1%, that is marginal. We'll have to give him time. I agree it doesn't happen overnight. You can't push all the levers to happen. A lot of economists and historians have commented between the similarity between a Reagan-Volcker administration in America and a Modi-Rajan administration in India. And there are some similarities. Both were extremely right-wing, coming from left-wing administrations. And Reagan gave latitude to Volcker to beat inflation. And then 2.5 years into his term, the great Reagan recovery started. So we'll have to give him some latitude as long as he sticks with cutting down inflation and ceding the growth imperative, if you will. You will see that in a year and a half, the growth will improve automatically. And that will be long-time, sustainable growth based on domestic strength, not necessarily on foreign capital coming in and buoying up the stock market or buoying up the currency.
If you were to sort of put out your wish list, 3 or 4 things which you would like to see addressed immediately, what would those be?
It's a bit above my pay scale, but if you would ask me, the first thing, of course, is what Mr. Modi referred to very correctly in his speech, that he will govern for all of India. If I go back to an example of US presidential history, Barack Obama said that there's not a blue America or a red America, there is a United States of America. So I feel the same way. He has to be an inclusive government. Can't be a saffron India, green India, OBC India. There has to be the Republic of India. And any government must work to create an equal opportunity society, not an equal outcome society. That is the difference. For the last 40 years and 50 years in Congress, we've concentrated on creating an equal outcome society. Economics tells us that doesn't work. Incentives work in the marketplace. So first of all, you create conditions that allow an equal opportunity for everyone, whether it's women, whether it's the OBCs, whether it's the STs. Everyone must have right to education, right to sanitation, clean living, welfare, whatever have you. So that's the first thing. The second thing, of course, is you tackle the menace of inflation and get India back on the GDP growth path. I think that confidence that the growth will give will be able to give you a lot of cash flows to solve your social problems, but it will give India back its confidence. We need to grow at 8%. If we have to employ so many people, I think 12 million jobs come up every year. We are not going to be able to employ them unless we get the economy growing back at 8.5%. So those are the two daunting challenges: an inclusive India, and then, of course, get GDP growth back on track.
Right. I just want to focus a little bit on reviving the investment cycle. And when we talk about that, we talk about supply side issues, resolving supply side issues. I just want to ask you, is there a demand problem here as well, which has largely gone sort of unspoken? The focus is on resolving supply, but there is a demand problem. And that's why industrialists are not setting up capacity, or they don't feel inclined to set up capacity. What's your sense?
I disagree, Prashant. I think Dhirubhai Ambani taught us this many, many years ago. Build it and they will come. Create the supply and the demand will come. India is such a big country. We are so starved of everything, whether it's electricity, whether it's housing, whether it's capital goods, whether it's education, that if you create a good demand, supply, the demand will follow. I firmly believe the problem has been the supply bottlenecks that have taken place in India, the lack of decision making at the bureaucratic level, who are afraid of charges of corruption coming or whatever else. So if you have a prime minister who's willing to back you up with the decisions you make and put the prestige of his office behind you, I think the demand, you'll be amazed at the amount of demand that comes through in a country like India. I'm convinced about that part, that demand is not the problem in India. In almost any sector, we will rapidly look at how we built out the demand for telecom, look at how we built out, the so many other sectors, FMCG goods, travel, what have you. I mean, it's just a matter of, creating that supply and institutions and, infrastructure in place, which I think will be his biggest challenge. I'm convinced that demand is not the issue.
So you think corporates will spend as confidence comes back, sentiment improves, which it already has, or do you think they'll still wait for ground conditions to change?
No, I think both will come. FI will come in, FDI investment will come in. You saw Lever and GlaxoSmithKline in the worst of times raising their stakes in the Indian companies out there. I think it's all about confidence. If you go back and say that, look, this is my tax regime, it's a stable tax regime, I'm going to take away all these phony cases. I wouldn't say phony, I apologize for that wrong choice of the word. But I'll take away all these retrospective amendments that is done to Vodafone, Nokia, IBM, who have created employment, created jobs in India. We will have a stable tax regime where we will treat it fairly. If a decision is made, a decision will be done quickly. I think money will pour into India. I mean, here's a country growing at 8%, in a world growing at 1%. I mean, money has to pour into this country. So I think it's all about confidence. And my sense is that we have in Mr. Modi a very mature prime minister, because, while the US denied him a visa for all these years, I think he's never taken the rank up personally and never attacked America on its behalf. So, it suggests that he's not taking anything personally, that he wants investment in India, he wants to encourage democratic trading partners, Japan, America, Germany, to be a part of India's progress. So, my sense is we need to give him a rope. I mean, whether we have supported him in the election process or not, I think he deserves a chance at putting a stamp on the country.
Just to come back to getting legislation through, in Lok Sabha, while the NDA, BJP-led NDA has about 62% of the seats, the Rajya Sabha, they only have 24%. Do you think that will cause problems in getting legislation through, or as state assembly elections come through, slowly, that can be overcome, that problem can be overcome?
Yeah, it could present a problem, of course, but there are ways around it. I think Pramod Mahajan showed us when he passed that terrorist act that you call a joint sitting of Rajya Sabha, Lok Sabha and pass it. I think Mr. Modi will be that decisive parliamentarian. Sometimes you need to take parliament precedence into court, and I hope broadly he follows the institutions of Indian democracy that have been nurtured and are very skillful, like the Election Commission, the Comptroller General of India, the Supreme Court. But I think if a government wants to pass an agenda, I think the public will support him if the Rajya Sabha is blocking him in that way. And politicians all over the world read election results. So I think my sense is that he will have a working majority in the Rajya Sabha. I don't think most politicians will oppose him at this stage, 1 year into his term. I doubt that.
Let's just get back to the market and earnings, Mr. Damani. Do you think market is already discounting fiscal 16 earnings at the prices where we are trading?
Market is looking ahead to India growing back again, so I'm not really sure. I think fiscal 15 is definitely discounted. It's now looking ahead to fiscal 16, where earnings growth will be perhaps more rapid. My sense is that a lot of talk in the markets that, at least from the lay public, market is up 3,000 points or so much, so now we should sell and get out. History tells you the opposite. I think bull markets rarely end with 3,000 point run from a 20,000 base or 6 months into the bull run. They typically double the index and then some, and they run over multiple years. So if we believe, as I believe, that a Narendra Modi bull market has started, in fact we just finished the first phase. We still have to go to the second phase and then the third phase, because typically bull markets last through 3 phases. So at best we're in the early stages of a second phase of bull market. So I see no hurry to get out, and I would not worry unduly about a corporate earnings. Buy a great business, hold it, don't get tempted to trade in and out of the market. The trick to making money in a bull market is always to buy great quality businesses and hold them, not to trade in them.
So you're saying this is essentially a buy and hold market, right?
Always. I mean, somehow, the market, changes the, the flavor of the month, the quality components. But over many, many years, I've learned that you want to just, for example, tech is out of favor right now, pharma is out of favor, because they feel, and rightly, that the rupee will, appreciate against the dollar, so the earnings will be impacted. But you can't sell a high quality technology business because you feel this is a temporary problem that is going to happen, or the rupee is going to appreciate. So my my thought process has always been the same, that this is a bull market. In the bull market, you want to invest in certain constituents that you believe in, which will do well over the next 2, 3, 5 years, and you want to hold them for the duration. I think trying to pick the flavor of the month, for example, infrastructure, public sector banking, is perhaps good for trader, but perhaps not that good for most investors.
So essentially what you're saying is stick to earnings certainty, right? Tech, pharma is where you'll find that certainty. Cyclicals you won. Earnings revival is still some time out. So are you saying be cautious of cyclicals, especially after the huge run that we've had?
Yeah, it's a bit more evolved thinking than that. I think tech earnings will be impacted by the fact that the rupee is appreciated. Pharma earnings, similar thing will happen. So it's a bit more evolved, but my first criteria is that I want to buy a great business at a great valuation. And then we'll worry about the rest of the thing. There is a momentum trade in the market that is now moving into infrastructure, power, PSUs, which might be fine. But for most people, sticking to the knitting, sticking to some great businesses is perhaps a better alternative than trying to trade in and out of the market. Of course, I could say it 100 times, people will still do that. So that apart, I mean, that's just the way I view at the market.
One last question, Mr. Damani. Real estate and gold, right? Retail investors, lay investors have sort of got into those two asset classes quite a bit over the last many years. So what's your prognosis for both real estate and gold? Real estate, I mean, I guess is a fragmented market, different prices, different geographies. Gold, I guess you can give a more consolidated one view. Do you want to take a shot at these two?
I mean, real estate stocks look good to me. I don't know about real estate markets itself. I'm not an expert on the real estate market. There is some thought, believe it or not, again from the BJP think tank, that in places like Bombay, they will release the FSI. The FSI that's at 1.5 in Bombay will be made free. As long as you provide adequate road or sanitation, they let you do it. There is some thought process. I'm not sure there's a policy paper in it, but there's some thought process. So these are radical changes that are going to take place within the real estate market. In terms of gold, I think it's better to be invested in equities. You get tax-free capital gains, tax-free dividend yield, put it into productive assets. I would vote for stocks over gold.